Hello and welcome to the Stansberry Investor Hour. I'm your host, Dan Ferris. I'm also the editor of Extreme Value, published by Stansberry Research. Today, we will talk with my old friend, Brent Cook. He's a geologist. He's an investor in small mining stocks. If you invest in those stocks, you can't afford not to listen to this, every word of it. In the mailbag today, notes about non-financial books and crypto. Interesting stuff. And remember, you can call our listener feedback line, 800-381-2357. Tell us what's on your mind and hear your voice on the show. For my opening rant this week, let's talk about stock splits. Let's talk about that and more right now in the Stansberry Investor Hour. Now, why do I want to talk about stock splits? That's kind of a boring subject, isn't it? And if you don't know what a stock split is, it's real simple. It's just a move that companies do to create more shares outstanding and to lower their share price. So if a company has, say they have 100 million shares and they're going to split the stock 2-for-1. So if you own it, for every share you had before the split, you'll have 2 afterwards. And yes, the share price adjusts, so the market cap stays the same, right? So if the share price is $20 before the split, it'll be $10 after it. The market cap will stay the same. And it just has the effect of creating more shares outstanding. And like I said, lowering the share price, which if a company's shares get really expensive per share, like 1,000 or 10,000 or 100,000 or something crazy, sometimes, not all the time, but sometimes they want to accommodate smaller investors, people who can only afford to buy 10 or 20 shares or something, or people who only have a few $1,000, put it that way. And if they only have a few $1,000 and the share price is $10,000, they can't buy one share. So maybe you do a share split, 5-for-1 or 10-for-1, and then all of a sudden they can afford to buy some. So it's just a way of accommodating smaller investors mostly. And stock splits were real popular in the dot-com boom, like starting around 1995. Actually, 1995, there were 11 stock splits in the market all year. 11 companies did it. And then by the time 2000 came and the dot-com boom had peaked, that year there were 104 of them, okay? So they became a much more popular thing. And they've kind of ebbed and flowed ever since, but there haven't been 100 of them, or even 60 or 80 of them ever since. There were a couple of smaller peaks, like in 2006, basically height of the housing bubble. There were 50 stock splits that year. And, 2015, there were 30 of them. Last year, there were 23. But there are some in the news that I find interesting. I find it interesting, for example, that I can just pick on anybody here, like Tesla is doing a stock split, or Amazon is another interesting one. Amazon is interesting to me because they're doing their first stock split since 1999. Right? Just before the stock got absolutely murdered. I think it was down like 90% in the dot-com bust. Alphabet is doing one. GameStop is doing one, which is really funny because, in GameStop's case, it isn't like the business is some great thing. It's just the stock has roared. So they want to cut the share price, accommodate smaller investors, maybe accommodate the Robin Hood crowd, maybe. I don't know. But to me, there is a whiff of speculative fever in these stock splits. And the one that really, really has attracted my attention is Shopify, the e-commerce company. I mean, the share price is down like 50, 55% or so. And they have announced a 10-for-1 stock split. Now that in itself, that's not that crazy. Okay, they want to split the stock. It's down 50%. Seems to me like before it was down 50% would have been the time to do it, right? Because the point is when the stock is at a high and the shares have a high price tag on them, you want to make it smaller. But okay, sure. But the really interesting thing is the other part of this. And the other part of this is that the founder, this guy Tobias Lutke of Shopify, he has been granted a 40% founder share of the vote, which I think is really weird. You don't get control of the company by having it granted to you by the board. You're supposed to have control as a founder by not having sold your shares. And this founder share keeps 40% of the vote with Tobias, with the CEO, even if he sells as much as 70% of his B class stock, his real, his common stock in the company. So he and his whole family, all his affiliates, where he might have spread shares around, they can sell as much as 70% of their holdings, and they'll still have this 40% vote. They'll be able to vote 40% of the outstanding shares. I mean, to me, that's a little crazy. I mean, I don't get it. I think it's the weirdest thing I've ever seen in this type of situation. Because having A and B class shares, that's not a weird thing. Lots of companies have done that in the past. I mean, Berkshire Hathaway has A and B. And they have A and B because they didn't want to do a stock split, right? So the A shares have never split, and the B shares, they have. They are now. I think they started out. Oh, I forget how they started out. Maybe 1/300th or 1/500th or something like that, and now they're 1/1500th, something like that. You know me. I don't keep all the details in my head, but I know approximately, and approximately is good enough in almost every case in investing. But that's the point of that, right? It's so smaller investors, if the share price is $500,000 and you only have $10,000, you can't buy Berkshire Hathaway, but you can, ever since they started with the B shares, right? So B shares aren't the issue, although there are some quibbles you could have with that too. But it's just so weird that they gave this guy this founder share vote rather than him just voting his shares. I think it's very, very weird. And if you're a shareholder, unless you think he's the Steve Jobs of e-commerce or something, and even then, you still want your vote. So I think the stock splits. I wrote in my last Stansberry Digest that the speculative fervor is alive and well, right? The fact that the S&P 500 and the NASDAQ and all these big indexes are down for the year, it doesn't matter. We're still within 5, 6, 10%, whatever index you want to look at, of the all-time most expensive moment ever, including March of 2000 and September of 1929, right? This is still the most expensive moment in history. So, the speculative fever is alive and well. The fact that GameStop and AMC are still trading at these multi-billion-dollar market caps when, I don't know, the businesses can't possibly be worth more than 100 million or 200 million. Just that they're dying. They're losing money. They're burning cash. And at AMC, they're throwing money, tens of millions of dollars at a gold mine that is shut down and cannot produce 1 ounce of gold for less than it costs to get it out of the ground. It's crazy. I don't know. I just always feel like I have to be the guy to point out every instance of speculative craziness in the market, because I'm always afraid that you're not getting enough of that, because everybody wants to be bullish. Everybody wants to buy the dip. And for as long as stocks and even still bonds, bonds are still expensive, even though interest rates have sharply come up. They've sharply come up off the most expensive moment in 5,000 years, right? According to the classic, what they call the Yield Book by Sidney Homer. 5,000 years of the study of interest rates, And we've just, we're within spitting distance of the lowest all-time interest rates ever, right? So it's still, the bubble is still here. It may not feel like it because the market is down, but the bubble's still here. And you can see it in this stock split thing and this weird founder share thing, and the fact that, you know, these stocks that deserve, where the businesses are unequivocally worth a lot less. Tesla, GameStop, AMC. There's no way they're not worth a whole lot less to any reasonable human being who would actually be in those industries and might want to buy that business. Those people will know those businesses aren't worth anywhere in the neighborhood of where they're trading. So it's still crazy. It's still a bubble. It's still the biggest bubble ever. And that's all I wanted to say about that. I think it's worth saying. Now, time will tell. It kind of hasn't been worth saying for a couple of years. Okay, I get that. But, so far this year, warning people about how expensive things were before this year started, it still was kind of a good thing. We'll see how it plays out over the next couple of years. That's all I want to say about that. I really want to talk with Brent Cook. He's an old friend. I used to see him at mining conferences all the time. Haven't been to one in more than 10 years. Can't wait to talk with him. Let's do it right now. Gold just passed $2,000 an ounce, setting the stage for a historic new bull run. Multiple billionaire investors are loading up on gold, including hedge fund founder Ray Dalio and real estate mogul Sam Zell, meaning now is the time to own gold. One precious metals expert is stepping forward with a big prediction. He believes we could see gold reach as high as $3,000 by the end of the year, possibly higher. Find out why and get instant access to his number one gold investment for 2022. It's not bullion, an ETF, or a mining stock. In the past, folks using this same gold strategy could have been able to make nearly 50 times their initial investment. Considering how quickly the price of gold has been moving, you don't want to waste any time missing out on the gains he believes are in store for this investment. To get a copy of his new free report with all the details, simply go to www.goldmania2022.com. Again, that's www.goldmania2022.com for a free copy of his new report. Okay, it's time for our interview once again. I'm really excited about today's guest. It's somebody I haven't talked to in a long time, and our guest today is Brent Cook. Brent Cook founded Exploration Insights in 2008 and has since transitioned into the role of senior advisor. As a seasoned geologist, Brent's knowledge spans all areas of the mining business, from the conceptual stage through to detailed technical and financial modeling related to mine development and production. He has worked in over 60, count them, 60 countries, and in virtually all geological environments, analyzing and providing commentary on proposed mine sites. Brent has also co-authored Exploration Insights, an instructive compendium of excerpts and geological explanations that he hopes will be a source of education for current and potential amateur investors doing their own due diligence. He also jointly developed the Drill Hole Interval Calculator with CoreBox, an invaluable tool designed to provide investors with a means of estimating the grade of drill hole intervals between the highlights of a longer assay interval. Wow, Brent, welcome to the show.
Yeah, thank you. I was hoping you'd keep going and going.
That's right. And that's all. It's been a long time. I think the last time I saw you in person was probably maybe 10, 12 years ago or so in Vancouver at one of those events.
Yeah, it's
Something like
been
that.
quite a while.
Yeah. So, Brent, one of the main things that I wanted to talk to you about, if you don't mind me just jumping into the deep end here, was this Highcroft mine that has come into the news recently. And specifically, I'm not a technical mining guy at all, right? I mean, I know you, right? And I know, the guys at Altius Minerals, and I know Rick Rule and a bunch of those people, et cetera, a bunch of people in Vancouver, but not a technical guy. But I couldn't help noticing with this Highcroft mine, which of course was invested in by AMC very famously recently, and I discussed it on the show a couple times. But I looked at the technical reports, and the most recent one that dropped on February 22nd, 2022, if you go to the page where it says mineral reserve estimate, and I have it in front of me, it says, section 12, mineral reserve estimate. And then the page is blank, and it says this section is not relevant to this report. I mean, Brent, that's bad, right? It's just like, help me out here.
Yeah, I would take that as not a good sign, indeed. It's crazy what's been happening with this Highcroft share price.
Yeah.
The mine itself has been around for decades. The oxide was mined and made some money way back when, but now they're dealing with what we'll call sulfide ore, which is basically sort of like a pyrite with a bit of gold in it.
Mm.
And the grade is extremely low. It's like half a gram or less. And any method you use to recover it is going to cost you more than the gold you're going to get out. And that really hasn't changed. So my understanding, and correct me if I'm wrong, is that AMC bought into it. The Reddit crowd and those sorts of folks jumped all over this thing and took a 25-cent stock up to, I don't know, $2-3. It's crazy.
Right. It is crazy. And here's the thing, Brent, like you and I talk about it like it's so obvious and simple. And you just stated very simply, the sulfide ore, however you try to get it out, you're not going to make as much money as it costs to do it. And you stated very simply, and yet they're able to do all this. They were able to get $56 million, half of it out of Eric Sprott, and then do this other $500 million shelf offering. I think they've gotten a couple hundred million. I think it was 196 million was the number they announced that they've raised so far. And of course, as you pointed out, they ran the stock up. It seems to be like this is a real problem. Like there's something broken about a market that lets this happen.
Yeah. I mean, the Reddit crowd and such, they've jumped on similar situations where there's a big short, and there was a big short on Highcroft.
Mm-hmm.
They see it and just ramp it up, and shorts have to cover. So I suspect that's a lot of what's happened. Regards
Mm-hmm.
to Eric Sprott, I mean, his basic investment thesis is gold's going to the moon. And if that's the
Mm-hmm.
case, you've got a deposit that right now is uneconomic. But if we see $3, $5, $10,000 gold, in theory, this will be economic. And the leverage there is incredible. You go from a negative NPV to a slightly positive or positive NPV, and that's a huge difference. But at the current market
Right.
cap, which I don't know what it is right now, but it's, it's there's gonna be a lot of people get burned on this.
Yeah.
Again, this is more. It's gone bust more than once.
Yeah. Yeah. I think the last bankruptcy was 2015. Okay. So Brent, you actually made this seem like it's not completely insane, right? It's massive leverage to a huge, and it better be pretty damn quick, increase in the gold price. So, I
Yeah,
mean, yeah, I guess the only crazy part left is, probably not something you and I want to get into, but, a movie theater company investing in that kind of a thesis. It's just, we get Eric. He's always been high risk.
yeah. And if your
Okay.
thesis is gold's going to 10,000 or whatever, these marginal to uneconomic deposits make a lot of sense. It's not the way I invest into the sector or Joe Mazumdar does,
Hmm.
who writes Exploration Insights now. It's not how we look at it, but there's a number of ways to make money, I guess.
All right. So let's leave that behind and talk about how you do it, Brent, because I want to tell our listeners, like, there are a lot of voices in the mining world that you should not be listening to. But I think Brent is one of the few who's like really credible and highly critical. Like I've seen you say, no, no, no. I've seen you say no to a lot of things over the years, just, reading and in presentations of various things. So that in itself lends credibility. But what is it you're looking for that you so rarely find? Maybe give me an outline of how you do this, how you invest in mining companies.
Okay, so I like to get in early stage projects where you're just looking at surface geology, soil or rock sampling, maybe some geophysics,
Mhm.
maybe a drill hole or two, or maybe not. And what you've got to do is understand what the potential discovery of this deposit looks like
Mhm.
and might be worth if the company is successful. And bearing in mind that, one out of, I don't know, 500 or 1,000 prospects actually turn into a real economic discovery and mine. So my goal, and Joe's as well, is to identify the fatal flaw and as quickly as possible and move on to the next possible um, discovery. And
Right.
doing that, I mean, we've bought a lot of companies that eventually failed, but as their pre-fail, I guess you'd call it, as the share price rises up because a good drill hole or whatever is starting to look better and better, if you can identify what's going to go wrong or what's going wrong, be it metallurgy, geology, jurisdiction, incompetent management. I've made a fair bit of money on ultimate failures, just knowing when, just getting out because the data tells me it's not going to work. So you're looking for that uh, key information that tells you this is a bust. It's not going to work. And if you don't find that, add to the position.
I see. So it's a process of attrition. You've got a series of bets, and then you're saying nope, 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 and then you wind up with the best ones.
In theory, I mean,
In
it
theory,
doesn't
right,
always work.
right, right. Nobody's perfect. Nobody's universally 100%, right. But it is an interesting process because when I talk about the things that I do in my newsletter, like, you know, we hardly have anything that's remotely related to mining. And there are companies like Costco and Starbucks and things like that, and smaller companies too. And I'm always looking for the positive attributes. Now, there must be some
Hmm.
positive attributes that you start out with, and then you cull them based on the negative ones. So, what is a positive attribute or two that you look for in a small exploration mining play?
Given the low odds, I think it only makes sense to buy into a company that their project has scale, meaning a big system, a big geologic alteration system, and you need big systems to make big deposits. And
Okay.
ultimately, you want to sell that deposit to a major, and that's
Hmm.
your exit strategy. You don't want to build it. And so the positives would be, early on, big scale, big alteration system in the right place. Like if you're looking for porphyry copper gold deposit, you're going to look in the
Hmm.
Andes and certain
Hmm.
places in the Andes. If
Right.
you're looking for Carlin style deposit, you're going to look in certain places in Nevada or Kyrgyzstan or something
Hmm.
like that, where the geology's right, the system's right, that everything looks right. So you're looking for a very positive geologic setting that
Hmm.
is conducive to the development of a big deposit. And most of these places are very geologic active. There's faulting, there's volcanoes, there's um, all sorts of things going on, which complicates the system. But the more
Hmm.
complicated in general it gets, that tells you the more chances and the more times mineralizing fluids have ripped through the earth and possibly deposited a deposit.
Right. So, one of the only things that I've learned about geology is this idea about volcanism, volcanoes, and finding you find the shape of these things. You can just take a look at it at the cross sections and drawings and things and see that it looks like it used to be a volcano, and but only now it's extinct. It's buried underground. So I think that's kind of a technical thing that the average investor could sort of wrap their head around. But the rest of it is pretty difficult, isn't it? I mean, all the geologists tell me the same thing. You and Brian and Dalton at Altius Minerals, who I know well, and a couple other folks. They say, well, Dan, we're the geology is very straightforward. Okay, but geology is difficult, right? Like, what business does the average investor have getting anywhere near this stuff? Shouldn't it only be guys like you, Brent?
I think if you're going to really get into this sector,
Mm-hmm.
the junior end of it anyway, you
Mm-hmm.
want to be able to have advice from someone who does know the sector, be that a newsletter writer, your broker, your brother who's a geologist, something like that, because this involves so many different fields, if you will. You got geology, you got metallurgy, which is the recovery of the material. You got engineering, mining. How do you blow it up? You've got the economics behind it. So you need those people, the capital allocation. You need politicians, or at least people who know politicians, to work through the back system. And then you need smart people that can raise money when you need it, backing this company. So there's so many different things going on in the background, and no one really is an expert on all of it. And it's not that much different than biology, or that sort of thing. And that
Mm-hmm.
you and I, there's no way I could look at a small company and make some decision if their cancer development drug is working or not working, et
Exactly.
cetera. I wouldn't have a clue. you know,
Mhm.
so it's sort of like that. You need, in my opinion, it helps to have advice unless you're just going to buy into ATF or buy the five biggest gold companies and hope the gold price goes up.
Right. That's a whole different proposition. Um,
Hmm.
I mean, gold can be on fire, but if the all those things, the metallurgy and the financing, all those things don't line up, you watch your little, junior mining stock price going down and gold's going up. So direction you don't know what the hell's going on. Um, and there's another aspect of this that I want our listeners to know about too. I've talked to people who are good at finding these tiny little mining stocks and making money on them, and it seems like a pretty ordinary thing. And you've alluded to it already, but it seems like most of them don't work out at all. And all your money is made, if you have 100 of these things, all your money is made by 5 of them, something like that. I mean, that's that one very well-known, extremely wealthy investor told me something just like that once, and I was like, wow. um, is that what it's like for you? Like, how many of these little mining stocks are you holding at any given time?
Well, in the letter when I wrote it, now Exploration Insights that Joe writes,
Hmm.
we try and keep it to 20 companies because really you start getting more than that, and it gets too hard to keep track of what's going on.
Right.
So yeah, there's one philosophy like Eric's brought or Rick Rule where they've got enough money behind them that they can buy 50 plus companies with
Hmm.
the knowledge that 60% of them are going to fail.
Hmm.
Now the 20% are going to go flatline, and 20% are going to do well with maybe two or three, giving you 10 plus baggers, and those are what makes you the money. I don't have the capital or the willingness to try and follow the details of 50 to 100 companies. So I try and keep it down to a manageable amount and just watch for positive or negative results and react to it, you know, in a timely manner.
I see. So I'm glad that we have you, and then you gave the example of Rick and Eric, because those are two different styles based on two different strengths. One is clearly a financial strength, right? But yours
Hmm.
is a technical strength, isn't it? I mean, you are a geologist. That is your strength with this, because you said you're not one of the guys with infinite capital behind them, right? Or massive capital. So your strength then is technical. Is there any other way? There's more than one way to skin a cat. Have you met any other mining investors who are successful who have some other powerful strength, or is it just pretty much you're a technical guy like you, or you're a finance guy like them?
Well, I think, I know people who do well just betting on management.
Oh.
They get to know the people who are running the company. They trust that they have the knowledge to recognize a good deposit and the financial ability to structure it right. I mean, Brian Dalton's he's a classic example of that. He knows how to invest in the right people or the right projects. He's got a real good nose for competent people, and so
Mhm.
he can invest in that aspect of it. Um, and actually, a lot of people do that. A lot of the letter writers, that's what they do is they'll invest in um, people they trust, but
Yeah.
with the caveat that there's a lot of liars out there.
Right. So that logically brings us to that part of this, which again, it seems to me like if you're not a technical guy or an inside financial guy based in Vancouver or Toronto or someplace, you're going to have a tough time. Like, I'm not naming any names, but there are people, I could name a couple of names and you and I would both roll our eyes and say, oh, geez, that I'm sure I could mention those names to 100, investors, retail individual investors, the kind of folks who read our stuff and manage their own money. And I could say, boy, you be careful of that guy. And they'd go, really? I thought he was,
Yeah,
whatever. Um,
yeah,
so which I guess that leads me to, it's difficult. Like, how do I know? Do I have any clues? How do I know that somebody is one of the better people that I can, more or less trust?
yeah. It's not easy in life in general, is it?
No.
Yeah, it's about like that. But I think if a retail investor or someone listening to your show here,
Mhm.
if they can go to the actual conferences and talk to the people, I think you can screen out a bunch because you can pick up the bullshit, right?
Right, you can smell it.
Um, if you want to wash your hands after you shake it, yeah, that's a bad sign, right?
Yeah. That's good advice. If you have another thought, please hold on to it, Brent, because I want to underscore what you just said. Did you hear what he just said, folks? Get in front of the people, shake their hands, share the same air. I think that's very important in this field as in almost no other. But go on. Did you have something else?
Yeah, no, that's certainly that. And then if the person can explain to you what they're thinking, what their target looks like, and how they intend to advance it, and how they know at what point, what's the go, no go decision point if the
Hmm.
results come back. If they can explain that to you in a logical way, that helps a lot. I mean, so many of these companies I spend time with talking to, they really don't have a concept of what success looks like. It's more like a treasure hunt, and they're just looking for money to go drill a hole and hope to run into something.
Right.
That's not a that's a clear red flag right there. If they don't really have a concept of what success looks like, odds of finding it are pretty low.
Yeah. So one of the things that Lawrence Winter told me, Lawrence is the exploration guy at Altius Minerals. We mentioned Brian Dalton a moment ago. Um, and one of the things he told me, because they run a really good prospect generator model, and he told me that um, to pick companies where they work the model well, like if they say that they have like this is our flagship deposit, we're putting lots of capital here. That's not really the way that model works, right? That model is little bit of
Mhm.
capital, maybe do your deal, find your partner, and move on. But it seems to me like you're not solely about investing in prospect generators. Like you will invest in other types of these little mining companies. I'm right about that, aren't I? I just want to make sure I'm right about that.
Oh
It's
yeah,
not
for
so.
sure. I
Yeah.
think the prospect generator model makes a hell of a lot of sense in that the people running it recognize the odds are so low, and so they generate an idea, bring it to point, then bring somebody else in to spend the big money to test that idea. That makes a whole lot of sense. I mean, I do own one called Origin,
Hmm.
which they've
Yeah.
got a number. There's a prospect generator. They've got two royalties now. That makes a lot of sense too, and I think it's smart to have a few of those in your portfolio.
Yeah. That gets to my next question, which is, what does it look like when you're not running that model? To me, it looks like, usually a small team of people with limited capital, and they've got one or two projects that they're working on, and I look at those and I think, man, I feel like that just ramps the risk way, way high up. And I better be Brent Cook if I'm going to put money into those, right? I mean,
Yeah, I think that's accurate. These tiny market cap companies, 10, 20 million Canadian,
mhm.
looking for something that, if they're successful, is worth $1 billion. I mean, that's a lot of fun when they hit, but you've got to really understand when they don't hit too.
Right. All right. So I want to circle back to something that you kind of alluded to before, when you talked about the need to understand so many things, including metallurgy and engineering and these other things, to when it comes down to actually maybe building a mine one day. Because why would you continue to develop a prospect if it could never be a mine, right? And the funny thing to me is that I want our listeners to know, and you tell me that if this describes you as well. I think it does. You never actually, you want to sell this thing. You want to sell the mineral prospect. You never actually want to be in the mining business, do you?
I
Right?
don't. No, that's a real hassle because and it's hard. It's a hard transition for an exploration company to make. You got a bunch of, you know, kind of free thinking wildcat geologists out there running
Guys like you.
around, possibly. Um, but the mindset that goes into actually the detailed work of building a mine is completely different than exploring for a deposit. So it's very
Yeah.
rare that an exploration company can transition successfully into a mining company. It happens rarely in North America, more often in Australia. They've got a
Mhm.
different mindset and a way of doing things. But yeah, ideally, I think you want to find something that a major mining company wants to buy and build. And there's your exit strategy.
I'm purposely doing this again. I want our listeners to. I'm purposely, I've invited this guy who's great at mining and geology and investing in these little companies, and it sounds like I'm really trying to make it very unappealing. And I don't mean to, but there, I feel like, I mean, people get really worked up about this. Like, all those folks buying Highcroft, they didn't know anything about the movie business buying AMC. And they sure as hell don't know anything about the mining business buying Highcroft. But I don't want to discourage people from doing this if it fits their risk profile. So I just want to sum up the Brent Cook way, if we could. Like, you've got a portfolio that you try to keep to 20. That's what you do with your real money, correct? You try to keep it to about 20
That's right.
names or so. Okay. And
Yes.
so money where your mouth is, the skin in the game. And you have these positive attributes. You're mostly looking for companies in elephant country, what we call elephant country, right? If you're looking for copper, you go to Chile, et cetera, as you outlined. Um, fish in the right pond, and a large system, right? Small mines are a bad idea. Big mines, they tend to work better, right? That seems to be our
Hmm.
second point. And get to know people. This is the one thing that everybody says, like the newest sort of mining newsletter person to the most seasoned geologist to the seasoned investors in Toronto, Vancouver, all these people. You all say the same thing about the people. Get in front of them. So it's a time and sort of money intensive process for an individual investor to do this right, isn't it? It's not easy.
Yeah, it is. If you want to do it seriously, or you can, like, you rely on someone who you trust and is
Hmm.
competent to give you advice.
Right. Like, I can see Brent, people could read Exploration Insights. They could have a real good broker. They could, get to know some of the people running the very best companies, right? Presumably they're a source of good information. So
Hmm.
so maybe there is a way to not have to travel the world and become a part-time, amateur geologist, to do this. And the other part of the Brent Cook way seems to be You better damn well know when things aren't going right. And I wonder, Brent, I know none of this is simple. I don't want to oversimplify, and don't let me try to do that to you. But, is there a pretty good list of typical things that tend to go wrong in a little mining exploration company?
Yeah, sort of. There is. First is, well, geez, yeah, there's it gets pretty complex here because that's what I've been doing my whole life.
Sure.
But metallurgy, which is basically how do you recover the ore?
Mhm.
It can be simple or it can be very difficult. The more difficult it is, the higher grade ore you need. Is it oxidized? If you're looking at gold, or copper, is it oxidized, which means, or is it sulfide? What when it generally forms, it's in a sulfide form. When it oxidizes, which basically means groundwater has turned your iron ore or iron pyrite into rust. Once that happens, the rust has released the gold, so it's very easy to get. It's no longer tied up in the iron sulfide. So that's something to keep an eye on in terms of metallurgy.
Mhm. The complexity of the metallurgy.
Yeah, metallurgy, jurisdiction, capex. Is there water? If you make a discovery up in the middle of the Yukon, your capital and operating and development costs are going to be way higher than if you do it just off of I-80 in Nevada.
Right.
Those things are huge.
Right. Okay.
So yeah, there's lists, but they get complicated.
Right. So there are lists, but they get complicated. And I encourage everybody, like, take notes and Google this stuff. Google, sulfide ore versus oxide ore and all this other stuff that Brent is talking about. Read the newsletter, Exploration Insights. Let's see. I think we actually may be ready for my final question, but I feel like I'm trying to wring you out, Brent. I really want to, like, is there anything on your mind that we haven't covered yet? Let's do that before we do my final question. Is there anything on your mind today that we haven't covered yet about what you like? If you want to throw a name at us, what do you got? What's up in that brain of yours?
um, I'll give you an example of a company that we own, Bluestone, which BSR, I believe, is a symbol in Canada. They've got a very nice deposit in Guatemala, run by competent people. It's got an NPV of like a billion US, and
Mhm.
currently trading for 200 and something million US. But it's in Guatemala, so that's an issue. I think
Mhm.
it's solvable, and I think it's going to be solved, and that's going to be a great deposit that somebody will buy and mine, and it won't be Bluestone. Although they're making it as simple as possible for someone like Barrick to come in and buy it. They're checking off
Mhm.
all the hurdles. Big hurdle there is obviously Guatemala. So you've got to keep that in mind. That's sort of an example of something that we own because we know the deposit's good and we think the politics in Guatemala is going to get better. So that's sort of one, you can see how we've thought this through and why we own it. On the website, Joe's got just
Los
finished
Gatos.
a commentary on a company called Los Gatos, which is a silver mine down in Mexico that the share price went down by two
Mhm.
thirds when they realized the resources they thought they didn't have. So he goes through and evaluates that, and that's actually a good thing. I think there's 5 points on there that he goes through as to how
Mhm.
we knew this wasn't or why this didn't work, and that's on the website. So I suggest going there and look at that. That's probably five good points to look at. Other than that, you've covered things pretty well, as
Well,
usual.
I'm glad to hear that. If Brent Cook tells me I cover things pretty well, then I've covered things pretty well. All right, Brent. So my final question is the same for every guest, and no matter what the topic, like even if we get off of finance, and you can answer anything you want. It doesn't even have to be mining or anything. But the same final question for every guest is: if you could leave our listener today with one thought, however simple or complex it may be, what would that be? Yeah,
Uh,
whatever's on your mind.
well, now that covers a lot of things, doesn't it?
Yeah, I mean, One thought that you'd like to leave our listeners with, no matter what it is.
Doesn't have to do with mining or geology or anything. You know, I've thought about why we're here on Earth a lot, and I've decided it's to enjoy it. So I
Enjoy
think
life.
just enjoy life. Kind of goofy, but that makes sense to
Yeah,
me.
I don't think that's goofy at all. And I actually have to tell you, I turned 60 in November, and that caused me to do a lot of thinking about this type of thing. And I agree with you. I have used, it's funny you should say that to me, Brent, because I've used that very lens. I've looked at my whole life, all kinds of things through that very lens over the past few months here. Am I enjoying this? I know, I think I know exactly what you're talking
Yeah.
about. And when I'm not enjoying something, oh boy, I'm looking to get rid of it, or downplay it, and find a different way to
Hmm.
handle it if it's something I absolutely can't get rid of. I think you're spot on, man. I agree with you completely. Maybe this is old guys talking. Maybe that's enjoy life. You're not struggling. You're not young anymore, but just enjoy life because not a whole lot of it left. Maybe I don't know.
Yeah, I think you and I have come along a similar path in that, um, from early on, high school days, I've always figured
Hmm.
what's important is to enjoy what you've got and you know, not worry about too many things. Just go out
There
and
you
do it.
go.
Be brave and do it, and
Good
you'll
thoughts,
usually
Brent.
bounce
Thanks
back
for
whatever
that,
happens.
and thanks for being here, man. It was great to talk with you. I hope we can do it again sometime.
Yeah, it's a pleasure. I hope to run into you in some show somewhere in some state or country.
Yeah, I should be. We've been locked down, and I've been so lazy. I've gotten used to being locked down. I haven't gone anywhere, but we will run into each other. I expect in like Vancouver or Denver or someplace, or maybe Toronto or someplace. Probably pretty soon. So
All right. Well, thanks for getting hold of me. I appreciate it. It was a lot of fun.
yeah, yeah, and we'll do it again. Reasonably soon, hopefully. How about that?
Sounds good.
All right, Brent. Thanks so much.
All right. Have a good day.
All right, you too. Well, it was great to talk with Brent again. As I said, I haven't seen him in more than 10 years, I don't believe. And I hope to get back to one of the mining conferences soon. I'm sure I'll run into him because he goes to every one and he's always there. And all the people I know who are any good at investing in little mining stocks, they always do it too, because there's no substitute, as we said, for getting in front of the people who you will be investing your money with. This isn't like anything else. It's not like buying Costco or Walmart or Starbucks and putting it in your 401k and forgetting about it. It's completely different and it's much riskier. You will lose money on most of the little mining stocks you buy, even if you're the most successful little mining stock investor in the world. Once you get past all that and get used to the idea of getting to know the people and getting to know something about, just enough about geology. I know teeny weeny bit about geology, but it's more than most people, right? I know the Highcroft mine has zero reserves. Most people probably don't know that. So there is a lot of learning to do, but if you can stomach it all, you know, you when you actually make money on one of these things, it can be like 500 or 1,000 times your money. It can be the most ridiculous money you ever made in your life. You'll probably lose 100% on 60 or 70% of the stocks you bet on with these things, or maybe not 100, but you'll lose something on most of them. But man, if you can just have discipline and run a portfolio of these over a full cycle, right? This is not the gains arrive quickly, but this is not a short-term thing. And take into account take to heart all the things that Brent said, do your homework and learn. It can be extremely financially rewarding. And I wanted to have Brent is like one of the very most credible top guys. And so that's why I wanted to have him on the program. Plus, I like him. We've known each other a long time. All right. That was great, man. I'm so glad we spoke with him. All right, let's look at the mailbag. Let's do it right now. One of the biggest fears I'm seeing right now from readers and podcast listeners is that there is no money left to be made in the US stock market, that the extraordinary gains of the past decade are gone for good, and that anyone over the age of 50 who's depending on stocks for their dream retirement is out of luck, destined for pain ahead. Look, I'm about as bearish as they come right now. You know that. But with the right information and recommendations, it simply does not have to be that way for you. This week, you have a very rare opportunity to get a free stock recommendation from one of the greatest investors of the past century, Mark Chaikin. When Mark issues a big new prediction or a free stock recommendation, it pays to listen. He says that while things are about to get much worse for many stocks in the market right now, and I agree with him, you also have an extraordinary chance to double your money from here on a very specific group of stocks that have barely even faltered during the recent volatility. No matter what's happening in the broader market, I always pound the table on the unique stocks that can protect and even grow your wealth in times of trouble. They're rare, but they're out there. And that is exactly the kind of stock my friend Mark Chaikin just gave away. This is a simple, free way to put a little money to work for your future. So don't delay. Head to 2022marketwarning.com and get your free stock recommendation from Mark. Again, you can access everything at 2022marketwarning.com. In the mailbag each week, you and I have an honest conversation about investing or whatever is on your mind. Send questions, comments, and politely worded criticisms to feedback@investorhour.com. I read as many emails as time allows and respond to as many as possible. You can also call our listener feedback line, 800-381-2357. Tell us what's on your mind and hear your voice on the show. Just a couple items this week, a couple of interesting items. The first one's from Philip G. Philip G says, "Hi, Dan. Thanks for your great work every week. What I like most, the diversity of different guests you have. I think everyone needs to find his own strategy, his own way of investing. The most important thing is to have a plan and stick to it. The media today is doing everything possible to push you away from your plan and sell you whatever they can. Find your strategy and simply stick to it long term, and then you make money." I agree with you, Philip. You should know yourself, have your own plan, and stick with it. And Philip continues. He says, on the recommendation of books, can you talk again about your favorite non-financial books? I found some great books by you recommended, for example, The Formula and others. And for those of you who don't know The Formula, it's a book by Albert Laszlo Barabasi, who we interviewed. It was a great interview. It was one of my favorite interviews that year. Episode 134, December 26, 2019. And basically, The Formula was about Albert's study of how you can make a scientific study of your own success through studying networks and the mathematics of networks. It sounds like a really dry read, but it's excellent. It's one of the best books, one of the best non-investing books I've ever read in my life, and it deserves to be read and read and reread. And I was amazed. I mean, people talk about all these like self-helpy things that can help you succeed, like the 7 habits of highly effective people. I'm not saying it's not a good idea, but none of those things are truly scientific. This is a truly scientific book on how to succeed in the world. And I'm amazed by it. So, Philip, it sounds like you want to hear another one, though. And I don't know if I really have one. I'll tell you, I have been reading fiction books, and I've been trying to find stuff outside of investing that address sort of libertarian ideas and things that maybe are kind of off the radar screen here and there. But I don't have one for you outside of investing, except to say this, that I believe that reading fiction is extremely important. And it almost doesn't matter. I think like regularly reading good fiction. And for me, like I recently read all 14 of the Ian Fleming James Bond novels, just from start to finish. Um, and I found it really insightful. Um, the books are a lot different from the movies, and the character is a lot deeper and more thoughtful and more introspective. Like if you saw the Daniel Craig movies, they're really great and all, but the very first scene in the very first one, Casino Royale, it's not the James Bond. It's not the real James Bond, as far as I'm concerned, because James Bond had a big problem with killing people in cold blood. And in the very first scene, he just sits there in the office of the section chief in Prague, Czechoslovakia, and the guy has an empty gun. He's no threat at all, and he just assassinates him. He just kills him. And he seemed to be smug about it. He was quite okay with it. In the real James Bond, that simply is not the case. It wouldn't happen. So whatever that may be worth, I can't even describe to you. The thing about reading fiction is I can't even tell you what it teaches me, but I know it's teaching me something, and I know it's something valuable. I'll know what it taught me when whatever is going to happen to me happens, and I go, oh, okay, such and such an insight came from such and such a book. The other thing I read was I read one of the Jack Reacher novels, and I found that very interesting. I found that character to be very interesting. He is. I saw him described as a righteous avenger for our time, and the action hero of our time, sort of the James Bond of our time, but a completely different type of a person than James Bond. And like I said, it was a valuable experience to me, but I don't quite know how exactly. And I'm just convinced that reading good fiction and classic fiction, I actually did just buy Moby Dick, and I read the first couple pages of it, and I thought, am I really going to be able to follow through in this? And I think I will. So, Moby Dick will probably be my next one, next fiction book. That's all I want to say about that. I think it's a great question, and obviously my answer is really not very specific at all. I don't think you need to read Ian Fleming or the Jack Reacher books unless you want to. But read something. Read what you think is good fiction. Find some good fiction. That's all I would say to you, Philip. Next and last this week is Troy R. Troy says, "Hi, Dan. Over the past couple of years, I've become an avid listener of Investor Hour and truly enjoy your show. I don't always see eye to eye with all that is said, but the show is always thought-provoking, and I guess that ultimately is the point." Yes, Troy, I agree with you. Troy continues, he says, "I have a question regarding your thoughts on crypto, regarding the amount of money that has been invested and or has migrated to the crypto space, as well as the amount of money now tied to the crypto industry. Do you think it is, quote, too big to fail? I readily admit I do not know the worth of the big banks that were too big to fail during the financial crisis. However, I'm guessing the trillions are now tied up in the crypto space. Cryptos plus NFT plus businesses, etc. Of course, trillions are the new billions of yesterday." Love the show. Keep up the great work, Troy R. And you understand that when Troy says trillions are the new billions of yesterday, he's basically just describing inflation. So, there are a lot of there are a lot more trillion-dollar entities now than there were the first time the phrase "too big to fail" came into existence. In fact, back then the only trillion-dollar sort of agglomerations of aggregations of assets were on bank balance sheets, were like bank asset values of the very biggest ones. So and bank deposits too. But yeah, so there's trillions in it. Is it too big to fail? Now, what too big to fail means is that if let's say Bitcoin, that's a huge one, right? If Bitcoin somehow fails, will it be bailed out by the Federal Reserve? Because that's what too big to fail. The too big to fail banks will be bailed out by the Federal Reserve. I have a lot of problems with that, by the way. for the CEOs and all the executives of those banks, they have, in some case, $1 billion and $100 million mammoth wealth, essentially backed by the Federal Reserve. It's a crime. It's horrible. I mean, talk about moral hazard. It's the worst. My answer to your question, though, Troy, is no. I mean, I cannot picture any Federal Reserve involvement if there's a crypto crash or if there's a Bitcoin crash. There's very few banks involved in this in any degree. So maybe their crypto holdings would go to zero and they would have a problem and take a big write-off, but they wouldn't go out of business, I don't think. I can't see it. I can't see how crypto in general, you say the crypto industry, and specifically Bitcoin, since that is the lion's share of the crypto marketplace, I don't see it happening. And if somebody does, write in or call in, feedback@investorhour.com, and tell me why you think that Bitcoin or the crypto space is too big to fail and could be bailed out by the Federal Reserve. I don't see it. So that's another mailbag, and that's another episode of the Stansberry Investor Hour. I hope you enjoyed it as much as I did. We provide a transcript for every episode. Just go to www.investorhour.com, click on the episode you want, scroll all the way down, click on the word transcript, and enjoy. If you like this episode and know anybody who might enjoy listening to the show, tell them to check it out on their podcast app or at investorhour.com. Do me a favor, subscribe to the show on iTunes, Google Play, or wherever you listen to podcasts. And while you're there, help us grow with a rate and a review. Follow us on Facebook and Instagram. Our handle is @InvestorHour. On Twitter, our handle is @investor_hour. Have a guest you want me to interview? Drop me a note, feedback@investorhour.com. Or call the listener feedback line, 800-381-2357. Tell us what's on your mind and hear your voice on the show. Till next week, I'm Dan Ferris. Thanks for listening.
Thank you for listening to this episode of the Stansberry Investor Hour. To access today's notes and receive notice of upcoming episodes, go to investorhour.com and enter your email. Have a question for Dan? Send him an email, feedback@investorhour.com. This broadcast is for entertainment purposes only and should not be considered personalized investment advice. Trading stocks and all other financial instruments involves risk. You should not make any investment decision based solely on what you hear. Stansberry Investor Hour is produced by Stansberry Research and is copyrighted by the Stansberry Radio Network.